Aussies with mortgages could be paying thousands of dollars more than they need to. New research has found the average owner-occupier might have paid more than $40,000 in interest charges this year if they haven't refinanced.
Yep, that's twice what they would have paid in 2022, meaning now is the perfect time for a New Year property health check. And to break it all down for us, Sally Tyndall from CanStar. Good morning to you, Sally. Why are people paying so much extra?
OK, I'm going to take you back to this time 3 years ago, and Australia's borders were thinking about opening, but, you know, rates were sitting squarely in the twos. In fact, I think there might have been still some handful of rates that were at 1%. Since then, 13 RBA rate hikes, 4 of which were doubles. It has been a massive increase in monthly mortgage repayments for a lot of Australians around there. The good thing was that the average owner-occupier, $600,000 debt, 25 years remaining. If they haven't refinanced or at least haggled with their existing lender, $42,900 is our estimate of how much they've paid in 2024 in interest charges. This is a huge amount. But many Australians have not taken these rate cuts lying down. In fact, our analysis of ABS data shows that almost 1 million loans have refinanced since the start of the hikes. But with well over 5 million loans out there across the country, what's happened to the rest?
Right.
Well, you know what's happened to the rest of them? It's just too hard. Like, it's hard to do, right? And every time you come in here, you say, you got to, you know, go back to your bank, you got to try a new bank. But the actual process of that, I don't know, it feels difficult, doesn't it?
Yeah, it does feel difficult, and let's not beat around the bush. It does require paperwork, but there are some banks that are willing to refinance you and do your application in as little as 10 minutes. In fact, you might get approved within a couple of hours. Others take a few days of back and forth, but let's think about the hourly rate here. You know, if that average owner-occupier, $600,000 loan, 25 years remaining, if they refinance from a really crap rate of 7.11% because they haven't renegotiated their mortgage since the start of the hikes, all the way down to about 6.33%. That's the average. They are going to knock $295 off their monthly repayments. That is a giant...
So it's worth the paperwork.
Giant trip around the supermarket. That's the average rate. If you go to a rate under 5%, you're talking about $425 a month off your repayments.
Wow.
It's not insignificant, it's huge.
It is huge amounts of money. It is worth the effort.
All right, so Sal, if you have identified that you've got an unhealthy mortgage, how do you trim that fat? What are the numbers that you should be looking at?
OK, well, here's a good New Year's Eve test for you. You write down the crap rate, that's anything above 7% for an owner-occupier paying principal and interest. You write down that average rate, 6.33%. That's what the average owner-occupier is paying. And then you understand a rate that starts with a 5 is highly competitive. In fact, the lowest ongoing variable rate on our database is 5.75. Write that figure down. And then next to those three figures, you write your own mortgage rate. And there is truth time for you, right? Where do you sit on this sliding pendulum? Because you want to be as below average as humanly possible. There are almost 40 lenders on our database offering at least one variable rate under that 6% mark. And a lot of people go, oh, I want an offset account, or I want to stick with the Big Four bank, or I don't have enough equity in my home loan to qualify for those rates. Let me tell you, some of those rates under 6% include an offset account. Some of them will let you borrow with refinance with 20% deposit, and some of them, no, there's not a Big Four bank in that list, but some of them are spin-off brands from CBA and Bendigo Bank. There is a lot of choice. It's there to take it.
So it is worth looking. Very quickly, in the paper today, Jim Chalmers is saying we should feel optimistic about next year. What do you think, Sally? Do you feel optimistic about the rate cuts to come and the economy as we look to 2025?
Look, the economy is on life support at this point in time, but unemployment is sitting at 3.9. That is spectacular. I do not think we're going to get a rate cut at the first board meeting, which is in February, but I do think we're going to get a rate cut, at least one, in 2025. We cannot guarantee it, but it is shaping up for rate cuts in 2025. The big question is how many, because ANZ is forecasting 2, NAB is forecasting 5 in the whole cycle. That's a huge difference. So I'm
going to go with NAB. That sounds like a great idea.
Say,
whatever they're doing, whatever they're looking at, let's look at that. Thank you so much for that, Sally.
Thank you, Sally.